Hey, Revolutionaries, I'm excited to bring you this week's episode where I'm welcoming back to the podcast Dan Borovik, trading wizard Dan Borovik. For fans of the podcast out there, you might remember that Dan and his colleague Justin Cohen I had them on, this was back in episode 22, where they had created a cryptocurrency consulting agency and were, just jamming back in I think 2018 when there was a real bull market going on for cryptocurrency. Since then, things have dissolved and most of the principals of that agency went their separate ways, but Dan doubled down, really upped his knowledge base and experience with going through this bear market with crypto and doubling down on trading. So really excited to have him back on and have everybody listen to what we talked about, where we talked about all the new businesses he started and the way he pivoted and reinvented during the crypto winter, I guess, that we just had, that we're coming out of, and during the pandemic. So, and how he's using blockchain with some of the businesses because of his knowledge and expertise. So it's pretty interesting. And then of course, we cover some of the topics of the day with crypto, like Dogecoin, what Elon Musk is up to with pumping Dogecoin these days, and NFTs, so non-fungible tokens. So pretty interesting episode. I figure there's so much going on with crypto these days and Bitcoin. I just needed to revisit that topic. So super excited to bring Dan back on to talk to everybody about it. But before we get there real quick, I just wanted to let everybody know, yes, I finally moved. The move has happened. And really, despite my, energy right now because I'm drinking coffee, I'm totally beat. So I just moved a couple days ago. The move was brutal. It was just long and everything, the culmination leading up to it, because I had to do a lot of packing and stuff before the movers got here. Moved, and then I moved on a Thursday. Then on Friday, I had my second vaccine shot, and Saturday was just brutal. And I'm recording this on a Sunday, so I'm finally kind of pulling out of it a little bit, but I'm glad to have that all in the past, mostly in the past, I guess. There's still some loose ends I got to take care of with the previous house, the other house that I still own. But anyways, the move has happened, and I'm going to put some pictures and probably do a walkthrough of the space on the Facebook page, because I'm going to be treating the basement with some Audi Meat material, and I want people to kind of see the before and after, or I'll put some maybe on my Instagram, because it's pretty interesting. It'll be a nice sound environment to continue recording the podcast in, and also potentially do some streaming performances out of. And it'll be my studio, my music studio space regardless, but probably do some performance streaming out of there. Anyways, for those that are interested out there, that might be fun to watch and check out. But right now, let's get to Dan and see what's going on in the world of crypto and Bitcoin. This episode of Jim's Reinvention Revolution is brought to you by MGS Graphics, a graphics production support firm delivering services to ad agencies, graphic designers, brand managers, retailers, and product manufacturers worldwide. MGS Graphics is not only reinventing, they are revolutionizing graphics production support. So how do they do it? Well, they free up your team to focus on big ideas while MGS Graphics handles the execution. Their skilled experts are ready to jump in when your project load spikes, so you can avoid the headaches and extra overhead cost of hiring new staff. Plus, you won't lose out on work opportunities because of delivery and production timelines. Did you know their skilled staff of professionals use the best and most widely used graphics software on the market? And when it comes to project management, MGS Graphics provides the highest level of customer service by assigning you a dedicated project manager. And they use the industry-leading project management software to ensure all communication, deadlines, and deliverables are met. This allows teams and clients to collaborate with each other in real time, no matter where you are around the world. Need more than just production? MGS Graphics also has a fully staffed creative team. Ask about their design services and agency partnerships. So, if you're looking for a partner to accelerate and support your business's growth, go to mgsgraphicspro.com/JJRR for 15% off your first project. 15%? That is revolutionary. Go to mgsgraphicspro.com/JJRR. That's mgsgraphicspro.com/JJRR.
Welcome to Jim's Reinvention Revolution podcast, the show that explores reinvention in the digital age as it relates to career, creativity, and technology. Stay tuned for interviews with professionals, entrepreneurs, and creatives that have reimagined success and are making a pivot. If you'd like to listen to the entire back catalog, visit JimJim'sReinventionRevolution.com for instant access. And now, here's your host, Jim Jim.
Hey everybody, hey, this is Jim Jim. Welcome to episode 81 of Jim Jim's Reinvention Revolution podcast. I'm talking today with Dan Borovik, and we're talking cryptocurrency. So, Dan, welcome to the revolution.
I'm glad to be back.
Hey, well, that's right, you are back. So, for fans of the podcast out there, if you remember, I had Dan on. Gosh, I was looking at when the episode was. It was back in 2018, like in February, I think, when it got released. And had you and Justin Cohen on, and back then, like go on the rewind here for a second to reimagine or remember what was going on in the world of cryptocurrency. This was when things were really popping the last time around, and it was going crazy. And you guys had developed this cryptocurrency consulting kind of business behind it, and so maybe we can start there because I feel like, crypto's kind of back on the scene, and I want to know what's going on with it. But what was going on then, and what are you doing now? Because I think that, I'm not sure if that still exists, but you tell me, Dan, what's going on?
Yeah, so the last time we talked, I was 23, and we just started this cryptocurrency consulting company.
Mm-hmm.
And, it was right at the end of the bull run. So
right.
Bitcoin, it ran up very hard, very fast in 2017 from under 1,000 all the way up to 20K. And then as it started, and it had a lot of trouble in 2017 because Bitcoin Cash came on the scene. So the community was torn because of the fork.
Right.
So they couldn't agree on which direction. Like, do they want to take Bitcoin? Like, what's the solution here? So because Bitcoin, it's still relatively new, the technology is so new, people were afraid. So during that split, there's a lot of chaos. But as soon as Bitcoin ended up being, legacy Bitcoin ended up being the winner,
mm-hmm.
that's when it just took off. And then you saw altcoins, and that's where human emotion and human psychology comes in, where people start wanting to get in on it, and they see Ethereum do so great, and Ethereum is kind of what kickstarted the whole alt ICO boom because Ethereum did so well. So
hey Dan, before we dig into the details of crypto, because we can go down some real rabbit holes here. Yeah. I just want to know what have you been doing since then? Because this has been 3 years ago or so. Is that consulting agency still together? I don't think it is, but you tell me. But where did you guys scatter, and what are you doing? Obviously, you're still in the really deep into the crypto space, but what have you been doing?
Right. So shortly after our podcast, we split up because the bear market, we call them normies, people who aren't in crypto. That's who you're always trying to get new people into the market and exposed to the asset class.
Mm-hmm.
There was a brand new asset class at the time. Right. So it kind of just died off because of lack of interest from everyone. Everyone kind of just said, "Oh, crypto's dead," So I stayed in, obviously. Justin stayed in. Everyone else kind of went their separate ways.
Mm-hmm.
I still keep in contact with Seva and Gerald. Most of them. Justin's still my best friend, so we still talk daily.
Right.
And what I did from there on was me and Justin. We went to a conference shortly after, and then we discovered algorithm trading. So I started Lotus Trading Signals, which uses trading view indicators, which are just algorithms, and they're not super complex, but pretty much it just looks for confirmation based on different strategies. Indicators. It's a mix of different indicators that looks for strategies to confirm when to enter or exit a trade. So I started that company, and that did really well during the bear market because everyone was kind of just looking for. In a bull market, everyone just kind of says, I'm an expert. Everyone's an expert in a bull market.
Oh, that's right.
In the bear market, everyone's freaking out. Everyone needs help. So what do? That was like the perfect time to launch that algorithm because, it calmed people down and like it kind of like showed them like the trend.
Right.
So that did really well for me, and that really kept me motivated also because I kept trading too, and I was 23, so I was relatively new to trading itself.
Mm-hmm.
So I spent the entire bear market mainly absorbing as much information as possible, just learning how to trade and, just learning how to build a brand because that Lotus Trading Signals, that was the first like real brand that took off for me. The crypto consulting, when we started it never really took off.
Right.
Just because it started at the end of the bull market. So, but with Lotus Trading Signals, it really took off. And that was kind of just like a really big start for me. So then, I just spent the whole bear market just, working on the company.
I got
and
you.
then really learning how to trade better and just becoming overall in terms of like psychology of a trader and just trading in general, like technical analysis, exponentially higher than last time we talked.
Okay. All right, man. Yeah, because last time I was like, I'm not a trader at heart. I'll admit that. I've had great success with really, understanding technologies, buying and holding, and just being able to identify, to pick the right things. And that's been my background. So I'm just not into the trading thing. It's a different mindset. It's a different personality. And I remember talking to you early, and I just really couldn't understand. I was like, whatever. Maybe you think you know what you're doing, but I didn't think I didn't believe it back then. But you stuck with it, and I believe it now because so much more, like you were saying now, and you've had this experience. So I think it's not really an age thing. I think it's an experience thing. You have to really go through bear markets to really figure out wait, what do I know? Hold on a second here. Because like you said, everybody's an expert in a bull market, and you think you might know something, but it's not until you're really challenged that you're like, okay, do I really understand fundamentals? Do I really understand what I'm doing? Is there anything that can be predicted, or how do you look at these numbers? So that's cool that you've had that experience and that you had this success with. What do you call your trading signal again? You call it Lotus or?
Well, so it's lotusalerts.io.
Lotus Alerts, right? Okay.
Lotus Trading Signals is the company.
Gotcha. Okay. So that's still around?
Yeah, it's still around.
Okay.
So during the bear market, so during 2018 and 2019, those 2 years, that was when I was going a lot heavier into pushing it, advertising, marketing, kind of like now. It's like one of those background companies. I have it, but it's not my main focus. In fact, it's like on the back end. It's kind of like autonomous in a way, to where I don't do anything for it, but because I'm active on social media and because I'm active on TradingView, people come to me. I still get trial requests. People contact me on TradingView. People still contact me asking me about it through word of mouth or just through finding it on their own. So I do zero work to find people. They find me, so I still get sales just based on it, just by leaving it open. Just leaving the company open, I still get sales.
Oh, so that's great, man. Cool. Well, that's all about building a brand and building your notoriety within the crypto space, and that's another thing that I've noticed that's been really growing, which is really a cool thing because it's it's great to have this knowledge, but it's great to have an impact on other people and have other people learn from you as well. So I noticed your Instagram is like been jamming lately. It's got about 100,000 followers on there, and you're big on Twitter and those kind of spaces. So we can give those handles out at the end. But since we haven't talked in a while, I wanted to know what was going on with this stuff. Sorry to jump in and break up your train of thought early on here, but it's like, are these things still rolling or not? Okay, so found out what happened to Crypto Cleveland. It's no longer there.
That's just the bear market. That's just Lotus Trading Signals. Just what I built in the bear market.
Right. Okay, so coming out of there,
we could talk about the other stuff that I've been building in the bull market, since 2020.
Right.
2020, that's where Livecanna comes in 2020.
I got you. Okay. Well, all right. Well, let's keep on this train, talk about your businesses, and then we'll dive more specifically into the crypto. So
that's fine.
Keep going.
Okay. So let's talk about then, I guess, the turn. I guess talking about me specifically, not the market in specific. So I'm not going to like really get into the details of like, what happened in 2020 in terms of the market.
Okay.
But well, I mean, we all know about the political stuff, about the virus, right? So anyways, everything just really crashed. And we were building Livecanna since late 2019, and everything kind of crashed. That was, it was kind of like a gut punch for a lot of people in crypto, because everyone thought, oh no, like what, like why, like if the narrative was, if Bitcoin is supposed to be this hedge against the market, why is it dumping harder than the market?
That's right. Because it was moving in concert with the market, right? People were thinking of it as a hedge, but I don't know if it is. Well, we'll talk about that when we get to the crypto specifically.
It's supposed to be this safety. If it's supposed to replace gold and be this place where people go to hide,
right?
Why would it drop over 50% in a day?
Right.
Why would it drop so much, like 3,000? So, anyways, we'll get into that later. But it really showed strength, and I was very surprised. But anyways, like to talk about Livecanna. Because of coronavirus, it really slowed us down.
Right.
Livecanna really slowed down, but we were planning on using the blockchain anyways, regardless of what was going to happen to it. Well, it wasn't going to die, but maybe the bear market, maybe if things went negatively with Bitcoin after that crash, maybe if things didn't recover, maybe if certain policies by the Fed, or who knows what would have happened, because maybe the bear market, we'd still be a bear market. Maybe crypto, maybe Bitcoin would still be like under 10K right now. Who knows what would have happened? But as far as the technology of blockchain, that's here to stay, regardless of the price of Bitcoin. So
certainly,
the technology we're using for Livecanna, and I'll kind of the gist of Livecanna, it's a CBD company. So think of a standard CBD company, but now think of the supply chain aspect. And like, for example, if you want to order from our website, sure, you could order directly from our website and you'll get the product, right?
Mm-hmm.
But what's different about our product is, because every product is, and this is kind of, we'll get into NFTs later, but before NFTs were cool, NFTs purpose, like their actual usable purpose, besides for just being art, is that each product is an NFT. So you could claim ownership of it, and you could verify the authenticity of the product. So it also does more things than that. So what people don't understand about NFTs is that in supply chain, you can track, for example, we used Vechain, so you could track where the product came from. You could see the COA information. So when you scan the code, the QR code, and you go and you see the COA, you see the product information, just a variable list of information. Like not ours doesn't have this yet, but on more on other products that Vechain has, like for example, Vechain is partnered with Walmart, and Walmart in China, they're like seafood, for example, or their wine would tell you the temperature it was stored at during transportation, what facility it came from, like how it was farmed, or how the alcohol was created, right? So it has all that information, because when you're transporting food, how do you know what temperature is really stored at? Blockchain tracks that. So our products aren't that high tech, but what they do tell you is that if you get one of our products and you scan the QR code and you claim ownership, only one person can own an NFT.
Mm-hmm.
Unless you do fractionals, but that's a different story. That's completely that's irrelevant to this conversation.
Right.
But only one person can own the NFT. So you're verifying that you own that. So for example, if someone wants to make a knockoff, and in 2019, I jump around a lot, but here's the gist of it. Here's the gist of it. I'll tell you the gist first.
Okay.
And why we wanted to use the blockchain. In 2019, you might remember how people were getting very sick buying vape carts. They were buying illegal marijuana vape carts, right? Not CBD. They were buying like the bad stuff.
Okay.
And they were getting very sick, and the federal government came out and said, hey, we're going to ban flavored vapes.
Yeah.
Because
I think they banned it in a few cities. I don't know if it's nationally but at that time, I remember that in San Francisco, I think, was banned.
Right. Mm-hmm. They were blaming flavored e-cigs, but when it wasn't flavored e-cigs, it was these underground, like second rate, like really badly, like poorly made, THC carts. So these people would literally cut whatever they want. And you never know. Like
Right.
you could buy the casing, and you can, and if they're making the oil themselves, they can make the oil as cheap as possible by cutting it with whatever,
Right.
by putting
And this,
whatever.
this happens in every market. There's going to be some lower players in there that are trying to just kind of.
So, but they were faking brands, so they were like reused. So they would like use real, because marijuana is legal in some states,
Sure.
and obviously in other countries. So they would fake these brands. So you'd be buying a brand you thought was a brand, but you'd be paying significantly less. So the market drove the prices down. And this is obviously just the black market, but anyways, the prices drove down in the black market, quote unquote, because they were selling these real THC brands. Well, they were using the brand names, right?
Sure.
So anyway, we were like, my partner Matt, he's like an expert on all of this stuff. So I'm not an expert at all at that. I only know the blockchain aspect of it. I don't know anything about cannabis at all. I know more now, but back then I didn't know really anything.
Right.
So he super knowledgeable, because he wanted to actually he applied to get his grow license for Ohio, because Ohio, I think a couple years ago, they were like giving out a few because they were going for medical or something. And Ohio's very strict, but they were and his group that he was part of, they didn't get it. But obviously, if he was in a state like Colorado or California or Oregon, he probably he could get it much easier. But because you're in Ohio, it's a bunch of hoops, and you can only do like only for certain medical, right? And there's way more hoops to jump through. But anyway, so he's pretty much an expert because of that stuff. So our product, Livecanna, if you scan, you claim ownership. If you give me the box after you bought it and I scan the box, well, guess what? Like, it already says that you claimed it. So for example, if you're a bad person and you're a bad guy, you want to sell fake Livecanna products for half the price or something, right? Because you want to pretend like it's real Livecanna. So you counterfeit our product. Well, for one, you can't counterfeit the blockchain, so you're not going to have that code. So unless people aren't, because they know the code's on there, they're not going to buy secondhand Livecanna products, because they're going to see like, oh, well, the code's not there. So, but what if they want to get the code? Couldn't they just take your box? So, for example, couldn't they just? Sure. Here's what they'd have to do. They'd have to order the product themselves, and then they'd have to not claim ownership of the bot, and then resell. They'd have to not claim ownership of, let's say, the vape cart. But here's the problem with that. Here's the issue with that, right? They would have to take on this unnecessary expense of buying the real product and then reusing the box to sell a cheaper product. They'd be net negative. They'd be losing money. Right. So, and I could get into more details on it, but anyways, like, long story short, the most important thing here is, because of the blockchain, no one could counterfeit Livecanna. No, our brand cannot be counterfeited now. I see. So that's the beauty.
Okay. Oh, well, that's interesting. I didn't realize that you were kind of putting that, I guess, on the blockchain, or using. So, are you using Vechain? Explain the maybe the structure, the logistics of how you do that, how you get it on there.
So for example, a lot of these NFTs that you see now, they're using Ethereum. And they're minting. So to mint an NFT, it takes obviously gas fees. So you're using energy, right? So you're not physically, but you're using, you're paying.
There's a cost to create the NFT.
Yes. There's a cost to create it. So you're creating the NFT, right? So and the same thing kind of here, but on Vechain. So we're partnered with a company called Real Items, and Real Items makes it. They're kind of our link.
I see. Okay.
So they have their own portal built out for Vechain for our supply chain. So I uploaded all the products on there, and from there I am minting, or I am creating. Like, for example,
I got you. So you have a partner. It's part of your own supply chain for your product, right? That's doing it for you. I got you.
So every NFT, there's a cost. obviously to
Right.
to produce.
Right.
You know, you're actually
Right.
using energy.
It's just part of your packaging, essentially, right?
Right. So pretty much, yeah. So we're partnered with them in order to this, because when you scan the QR code, you go to their website and their portal and their portal displays the interface that shows you everything on the blockchain, like all the information.
Right. Right.
Because because the blockchain itself, you have to build a web application to actually show you stuff. You know, because like
Right.
I mean, you know how the internet works. You know, you can't just it's like any website code. You're not just going to go to when you go to a website, there's an interface, right?
Right.
Like so that's kind of what it is.
I got
So
you.
think of the blockchain the same way that you would think of like code for a website.
Sure. Okay, so you got your Livecanna company now, and it's a CBD based company, but that's cool that you've integrated your your blockchain knowledge and your expertise in that area to kind of figure out this new way of doing business. And obviously for CBD, for certain niches, like you said, that are susceptible or whatever to getting ripped off, or that are some of the bad people in the world like to work in those niches. It's important for your company, so your company can have a top end brand out there, right, that people know and can't be ripped off. So pretty cool. All right, so that's what else you got going on before we start digging down the rabbit holes of crypto here.
Let me think. So let's see. So pretty much we're talking about the trading signal company. We talked about the CBD company, which both revolve around cryptocurrency. And then obviously I'm a trader.
Right.
So trader, I still do some consulting on the side, but
I was
mainly
just going to ask you that if you were working with clients at all, consulting wise.
Yeah, I do have people who obviously they ask me for advice, they ask me for help. So I do work with different clients, that do need consulting work or anything and of that nature of crypto.
Right.
So
right.
I do. Then also, obviously social media. I do make, if over 100,000 followers, I do get like paid to advertise for certain companies.
I gotcha.
So I've done that.
Do some affiliate relationships.
Yeah. So getting paid to make posts and whatnot, or like just pushing certain cryptocurrency brands. And in a bull market, every brand wants you. Every new crypto company, they're popping up like weeds everywhere.
That's right. That's right.
So that's the bread and butter. There's other like small stuff I'm working on. I'm working on more NFTs. I'm working on just as far as digital art goes, I'm actually working on projects for that too, to where I'm going to start releasing NFTs and doing things there. So I'm kind of like dabbling into that aspect of the art of it also.
All right.
There's a lot.
Oh my God. There's so much going on. I can talk to you for like hours and hours, I'm sure, on all this stuff.
And in the stock market, aside from crypto, I got heavy in the stock market. So now I'm like, just having a lot of fun in the stock market. It's a very fun market. But I'm not going to say it's easier than crypto. It's definitely less volatile. So, and you don't have to be as worried, because of crypto, it's 24/7, it doesn't close.
Yeah.
But the stock market, if after hours, the volume is so low, but regardless of after hours, I mean, you during the day, you might have to make some quicker decisions, but overall you have time. You have the whole night to think about your next move, or the whole weekend to think about your next move.
Right.
So it's more like relaxing.
Well, let's come back. Relaxing. I gotcha. Well, let's come back to the stock market a little bit later, because I had that on my list of things to ask you about a little bit. But so let's go back to, sorry, I know you're jumping around, but you got a lot going on. And so let's go back to cryptocurrency and Bitcoin, and how you're thinking about what's going on like right now. So I just want to mention a couple things. So recently I noticed that Coinbase, for example, is thinking about going public. They're thinking about doing a direct listing. So their ticker symbol at some point will be COIN for those interested out there. But that's sort of like kind of maybe representative of maybe the state of Bitcoin or the state of crypto in a way. And I'm kind of curious as to how you think about, because there's been, since we last talked, I think people have wrapped their head around a little bit about some of the value of Bitcoin or some of the value of decentralization and these kinds of things. Now that it's becoming more popular, now that some larger institutions are moving into Bitcoin, and Coinbase is going to go public here, I guess I just want to get your overall take on how you're thinking about it, but also the rub between decentralization and regulation. Like, where do you see the whole situation these days?
So in terms of Coinbase, the Coinbase listing, once the I think they had they released their S1 or in December they started talking about it in the direct listing, and when they did that kind of started a massive rally. But at the same time, January and February was a big tech boom as well in the stock market, so it kind of overlaps. So I don't know how big of a deal Coinbase announcing in December exactly was for the big boom we had in January and in February for crypto, but definitely other crypto exchanges like Binance, for example. Binance, the price of it went from $20 to almost $400, and their as far as market cap, their market cap ran up to like almost 40 billion or around 40 billion. That's partly because Coinbase in the private markets right now, they're trading at about 100 billion valuation. So everyone's kind of saying $100 billion for Coinbase. That's absurd. That's so much, right? I don't think that's absurd at all. I think 100 billion. I mean, I think I'm actually a bull on Coinbase. I think when it launches, I'm going to be getting in. I think it could easily go to 400 billion. And I mean, I'll tell you why later. But as far as that 100 billion valuation that was circling around in early January when it kind of like ran up in the in the private markets, and also there's exchanges like FTX, which you could trade like perps, which is it's the paper markets. It's just you're pretty much just you're just betting on what price it's going to be. And in the paper markets on FTX, they had Coinbase trading even higher, like little over 100, right? So it's kind of crazy to see that, but that kind of went wow, $100 billion for Coinbase. That really pumped up Voyager, BlockFi, and Voyager is actually listed. It's a Canadian company. It's listed on this and it's in the billions, the valuation. It's in the low billions, but Binance, FTX, all these platform tokens, like all these not platforms, sorry, all these exchange tokens like like BNB just went nuclear, and then everything just kind of went straight up because of Coinbase's 100 billion valuation. So in terms of regulation, I mean, are you asking what? Well, I guess
here's my point here. So part of what makes crypto interesting is the decentralization, right? Oh, okay. That makes it less risky in some ways, or less controllable by nation states or whatever it might be, right? Maybe less volatile, but maybe we'll get to that point someday. But crypto, obviously Coinbase is an exchange. It's a centralized part of the Bitcoin universe, of the crypto universe. And coming onto the public markets makes it more centralized or more sort of traditional in a way, right? And there's going to be more regulation around it because of it, because to be on the public markets, you have to be regulated by the SEC, whatever. That's how this country works. That's how the U.S. works. Is that counter to the idea of Bitcoin or to the culture? Or I'm just confused by the whole thing, honestly, in a way. I'm not confused why Coinbase would do it, meaning, hey, if we can cash out, we'll cash out. But with all the hype behind Bitcoin and crypto, why do they need to cash out? Why do they want to do this? I'm confused about the whole thing.
Well, with a direct listing, they're not making new shares. You're just selling existing shares. So they're
right,
really
but the reason to do it, the reason to do it is to have this real cash inflow.
Right.
And if you don't, if your whole idea of, building something is not about fiat currency, then why do you care to be on a public market?
Well, my thing is, I mean, I don't, as far as decentralization, I think it could coexist with obviously with governments. So the way I see it is, well, you have to look at first the narrative. So the narratives of why Bitcoin and the crypto market has exploded. And I mean, obviously, if you look at the political landscape, you could see that, well, Keynesian economics, actually now it's MMT, which is you just printing tons of money. So our dollar's devaluing, right?
Right.
So then Bitcoin's increasing in value because everyone's kind of running from the dollar, right? And I mean, it's the same things in the stock market. Everyone's just running into risk assets like Bitcoin. And then now when it comes to decentralization, because obviously, so decentralized money. So when you're talking about Bitcoin, so that's why it's going up because of all the money printing. But then when you're talking about in terms of decentralized money, like how it's better than putting your money in, let's say, like the stock market, which is also running up because, any risk assets running up. It's because, for example, if you've seen, I'll give you like some examples, like some politicians over the course of the last few months, they're kind of like, let's say like PayPal or their credit card processor or something. They're like, we're not doing business with you, or like, right. Or like, we're cutting off your banks. We're closing your bank account. Or so it's pretty much like, if you have money in an account and like let's say the government doesn't like you or you're a bad person, yeah, they could seize your money, they could close your accounts. Right. Or if they just don't like you because of politics nowadays, they could tell you, oh yeah, you can't use PayPal anymore. And this is kind of how some companies got into Bitcoin very early on, because they were labeled as extremist companies, and they weren't allowed to use PayPal or Stripe, or they weren't allowed to use anything early on, so they were forced to use Bitcoin early on. But as far as now, it's kind of escalated that from everything happening
regardless of the last few months, this is just a fundamental idea of. It's just
rolling down a hill.
Yeah, but that's irregardless of my point. It's irregardless of my point. We know that fundamentally this is one of the reasons why cryptocurrency is interesting. It's the decentralization, right? It's outside of fiat governments. So, of course, you can do that. You can play in that world. My question is, why is Coinbase, for example, that has been a big player in this world, why are they going the other way? Why are they coming into the fiat currency world? What's the rub there? I don't understand. I'm kind of confused by the whole thing. You understand what I'm saying?
Yeah. So there's kind of like two economies that are simultaneously growing right now. There's the centralized companies like Coinbase. Even Binance is it's like a mix of centralized and decentralized. But Coinbase, like you're saying, it's fully centralized. It's a company.
Right.
If you store your Bitcoin on Coinbase, you don't own that Bitcoin. Coinbase could actually say, hey, if you're a bad actor or if they don't like you, they could freeze your account and they could
we know that.
But if you hold it in your private wallet, obviously they can't.
Right.
But so you're kind of getting into the whole DeFi versus Cefi.
Right.
So
exactly.
So a good example of this is looking at something like BlockFi or Voyager. BlockFi is a centralized lending. It's a company that you could park your Bitcoin or your stable coins and get interest, very high interest, up to like 9-10% even, like 9% interest on your stable coin, USDC, which is very high, very, very high rate. And then there's DeFi, which is the same thing, but there's no entity. It's autonomous. It's a decentralized autonomous organization. So it's actually fully decentralized, where the token itself is a governance token. So by me holding some of that token, you holding it, we have voting rights. So it's kind of like it's like capitalism. So it's capitalist socialism. It's really weird to explain it, it's like a capitalist socialism society where we all own whoever. It's still run by money because you have to have more money to have more shares.
Yeah.
of the government's token. But then you have voting rights, and then you could make proposals. The actual creators, founders, the owners, people who created this protocol, these smart contracts, they have no, they don't have any control over it. They don't have any keys. They can't go in and do anything. The smart contracts are all autonomous. They're running on their own. No outs, no third party could go in and change it. But with the governance token, the community, people who hold tokens, they can make a proposal, they can vote on it, and then how it's set up is that like voting is for a couple of days, and then a couple of days of waiting, and then boom, the change has been made. And I can get into like how that system works, like how, like, for example, like decentralized lending works and those DAOs, or like a Uniswap, which is a decentralized exchange, right? It's the community. We provide the liquidity for the pool and get paid, because this is how capitalism is meant to be. It's weird because it's kind of like socialism capitalism, because the people own it. There's no one entity that owns it. So by me providing liquidity to this lending pool or to Uniswap, I'm providing liquidity into whatever coin they have on there, allowing other people to trade it, because I'm the liquidity provider, and I get interest by providing liquidity. And that's just how this ecosystem works. There's no owner, unlike Coinbase, where you put your Bitcoin on Coinbase. Well, they're providing liquidity, so they're taking so they're the ones who are providing liquidity to whatever you're trading, and they also kind of own your private keys. So, and they're a company. So if anything happens to them, if they get right, if the regulators go after them, or if something happens to them, if they go bankrupt, and your coins are there, or you're trading there, game over, right? But if you're using these DeFi, these little, it's so cool. They're like little like autonomous, there's little like this smart contracts just floating in cyberspace, right? And you can interact with them, and regulators, they really can't do anything to them, because what are you going to go after the creators? If you go after the people who created them, what is that going to do? The creator can't turn it off. It's kind of like you built. Let's say like you built. It's like Elon Musk. He put a car into space,
right? And
then the regulator's like, that car is in violation. Go bring it down from space. How am I going to do that? It's free. I built it, but I can't reach it. I don't have any control over it. It's kind of like that,
So, well, okay.
It's confusing, I know, but
well, I mean, you can build anything you want. That doesn't interest me. What interests me is the value of what you build. So so I'm trying to understand the value of how to think about any of these things. So there is this concept of decentralization, right? Of having it be independent in some ways, but there's always a trade-off. There's no free lunch. So the downside of the decentralization is this independence, or is the responsibility for custody as personal custody, for example, right? So, there's some value in having a central exchange, having part of it centralized, right, for people that want to be involved in it and reap the benefits of it, but don't trust themselves personally to manage whatever it is. Like I don't think this custody and I don't think the balance of decentralization versus centralization has been solved yet. It's not clear what the right balance should be.
There's different purposes.
You know what I mean?
You were talking about Coinbase, and are they against what crypto stands for? And I don't believe so, because if you want to hold, for example, who would buy Coinbase shares? Someone who, you have a retirement account or whatever. You don't want to. You can't directly buy Bitcoin, or maybe you don't want. Maybe if you could, maybe if there was a Bitcoin ETF, or Grayscale, Bitcoin Trust. Maybe they don't want to do that. Maybe they want to buy Coinbase, because by holding Coinbase shares, they're kind of holding a piece of the pie, because you don't have to bet on you don't have to put all your marbles into Bitcoin or into Ethereum. By owning Coinbase, you're kind of it's like a horse race. Instead of betting on one horse, I'd rather bet on I don't know the company that does the horse racing every year, but whatever, they probably make money too, right? The winner of the horse race, that the horse makes money, right? The winner of the horse race makes money, but the company that hosts the horse race wins every year, right?
Right.
So that's Coinbase. They're the biggest exchange. They have the most they're going to be valued the most. So by owning some of them, you're kind of owning a share of all the altcoins they have on there, all the coins they have on there. So you're pretty much betting on all the horses equally. You don't have to bet on one individually. But here's where it gets interesting. Do you know much about stable coins like USDC?
Not a lot. I know of them.
So XRP, if you know about XRP, it was created initially to be a bank coin transferred between banks because I'm not going to get into the gist of the whole, I remember like the whole GME stuff and about the settlements and about like how banks transfer money between each other. But all you need to know is that transferring money, if I want to transfer you money in a stable coin, or if me and you are banks or institutions or whatever, private institution, whatever, doing it so in a digital stable coin, like a dollar pegged stable coin, is a billion times better, a billion times easier, cheaper, faster. It's recorded on the blockchain, self-auditing. It's in every single way, shape, and form a more efficient way to transfer money between institutions or people in a stable coin. Or you could use a cryptocurrency, but banks aren't going to be transferring money in a currency that's going to keep changing value.
Right.
They want to do it in a dollar peg coin like USDC. Right. USDC, it's a growing market cap. It's currently at 10 billion, but it's been growing rapidly. It started the year off at like 5 or 6 billion. And in the last 3 months, it grew to 10, and it's continuously growing. So my bet on Coinbase is more so Coinbase goes public and they have this USDC coin, and that could be used by Visa, MasterCard, by banks. To settle transactions because there are no. So you probably heard some countries are doing central bank digital currencies, CBDCs, central bank digital currencies.
Yeah,
these are going to be like a dollar peg, a yuan peg, in China or like whatever, right? So we are years and years away from the Fed having a dollar pegged central bank, right? Like an actual like Fed backed one, but we have private ones. Like USDC is the biggest, most trusted private one.
Right. Why would you say we're years away from the Fed doing that?
They're very slow movers. They're not even like by the time they start. And plus, from what they've said and from how they work and how they operate, we're definitely maybe 5 years out from that being a reality. They haven't even started. They're thinking about it, but how the U.S. operates is, and how the Fed even says, we don't have to be the first, and there's no reason for us to be the first.
Yeah.
Right? They even said that they don't want to be the first.
I think it's reasonable, actually, risk-wise. Let someone else figure it out.
Until that happens, we have Coinbase. Coinbase owns Circle. Circle is the parent, is the company that produces it, or that USDC, the dollar-backed stablecoin. And USDC is the safest. It's the best one. And once Coinbase goes public, honestly, I really see this stock doing very well. Even in a bear market, I think Coinbase is going to do well because USDC, like the ability. Here's where I think that stable coins, the value there for the financial system is just that value is just, in my eyes, more valuable than Bitcoin. Like people, a lot of people will disagree with me. They think that it's the way you want to look at it, because I believe in governments. I don't believe in a world where there is going to be no U.S. government to where Bitcoin is now the currency and that the people own because they're in, and it's kind of like in macroeconomics, people have differing opinions. It's kind of like the whole deflation versus inflation argument. Half the economists say we're having inflation. Half say we're having deflation. No one knows what causes inflation. People could say, well, this is going to cause inflation, but there's no 100%. This is what doing this causes inflation.
Right.
It's impossible.
Right.
It's just all theories.
It's interesting business being like a finance person or an economist, like whatever you say could be true at some point, but
Exactly.
Yeah.
So when it comes to actually like the Fed coming out and doing their little like speeches on their monetary policy, they can't do anything, they could talk and try to encourage the market on their own, but they can't really do anything. But anyways, I do believe that these stable coins, the ability to settle transactions on them, the ability for banks to, institutions, for anyone to just, I think that USDC in the next couple years is going to be what we're going to settle transactions on. I think that's going to be an important layer. And in fact, it might even be I don't know, but like, what if the government wants to adopt it? But then again, like, would they really partner with a private company? Who knows? I mean, maybe they want to make their own, but like, there's a lot of downside also if they make their own, because you could freeze. If I'm using USDC, and and I'm a bad person, they could freeze it so easily. If I have dollars in my hand, they can't freeze my physical cash, right? Because it's physical cash, but they could freeze. And then when they're airdropping money, like, we're getting stimulus checks. If there is a Fed coin, the central bank digital currency, Fed coin, dollar peg, and they drop it, and they could drop the second that bill was signed, within 5 minutes, everyone could have had their stimulus check.
Sure.
But here's the catch. They could write in the smart contract like, oh, this must be spent within a week, and you can't buy stocks with it. It must be spent on food and utilities, and like they could do that.
Right.
Or they could do that. People, so that's a different rabbit hole. But I think that's kind of where you're kind of asking about the regulatory side, the control side, and that's where crypto, the people who are pure. Not like anarchists, but people who are pure like anti anything,
like libertarians or whatever you want to call them, like they think there's real value in that real decentralization, but there's these weird responsibilities and risks with it, which I'm still confused. Like I said, I don't know what the right mix of that is.
There's two worlds, and they could coexist. There could be a world where companies like Tesla store their Bitcoin holdings on with Coinbase, which is what they're doing. Coinbase has custody of Tesla's holdings. Coinbase is going to have custody of a lot of institutional money, and then also just their shares alone. A lot of companies, a lot of institutions, they're going to want to own Coinbase, and then eventually it's going to be added to who knows what it's going to be. I think once it hits, it's gonna probably be $500 billion company easily. I mean, it's like I wouldn't have thought that if it wasn't for their stable coin, because I think the stable coins are such an important part of our future. Like I just told you why all that, right? That is why I think Coinbase is going to be immensely successful. And then on top of that, then you have obviously the new financial world. So Ethereum has its own ecosystem where Ethereum is the currency. Ethereum is the currency in the Ethereum ecosystem. So if you're going through DeFi, right, you're going through Uniswap, decentralized exchange, Aave or Compound, decentralized lending, where you could earn. Why would I want a 1 point? What is it right now? I'm looking at it, 1.65% U.S. government bond 10-year, right? A 10-year bond, 1.65% yield. When right now you could earn over 10% yield, which is a 10x. You could earn almost 10x more.
Right.
DeFi, but those numbers are going to come down. It's because it's supply and demand. It's all supply and demand right now.
Yeah, right. Supply and demand. I mean, it's a new thing. I think there's still a lot of speculation in it. Personally, it's just my personal opinion. It's just
everything technology is speculation.
Like
speculation is 90% of the value.
Well, talk to me 10 years from now. Like, I just can't. I really can't get behind a lot of it personally. I know there's other people out there that think differently. That's fine. But, well, anyways, so okay, that was. I just wanted to probe that kind of idea a little bit because I'm still confused about what the value is of the decentralized part versus the centralized part. And like you said, we'll probably see people or institutions or companies or applications going back and forth between, like, some coming, like, Coinbase for a while was, the whole point was to be in the Bitcoin world. Now they're coming into the fiat world kind of, and we might just see this back and forth with a lot of different things, depending on where the real, what people want, really is what it boils down to. Like you said, like, some people are really anarchists and they want to have no nation states and they just want to run around the world. But like I said, that's that puts a lot of responsibility on you as a personal human being. And as soon as you get in trouble, you're going to wish that you had a nation state behind you that could come and rescue you with healthcare and retirement funds and all these kinds of things. So it's, we're just going to end up rebuilding, like the new boss is same as the old boss kind of idea. Right. People like all the utopias, all the cults and all those kinds of things that get started with this utopian idea. Eventually it starts looking just like every other country in the world.
Exactly. Yeah.
It's just the way it goes. But, well,
it's going to coexist. Centralization and decentralization.
Yeah. Like it always has. It's just what's the right mix? What's the right mix? When it gets too oppressive,
there's no correct answer because every single person
right.
has a different opinion. Right.
When it gets too oppressive, then you have a coup or you have a revolution, and then it gets reset. And then we'll get built up again. So, well, okay. So there's a couple other things happening in crypto, and one of them was that we mentioned a little bit before was this idea of NFTs.
Okay.
Right. So let's talk a little bit more specifically about NFTs and maybe explain the term NFT, non-fungible token. Explain that a little bit for everybody, what that means exactly. But why is it a thing now? Why has it gotten popular?
So non-fungible token, pretty much it's just, you can't be replicated. There's one. There's the original, right?
Right.
And people are like, well, I could take a screenshot, or I could, like on the internet, as far as the internet has been alive, people have been making copies, right? No one knows what you can't point to, if you point to any famous internet meme or picture or anything in the last 20 years, you don't know, no one could point to which one's the original. Well, with NFTs, pretty much it is a token that points to this is the original. Mm-hmm. This right here, and this address right here, this person who owns this address, maybe it's me, maybe it's you, they own the rights to the original. And that's pretty much what it is. It can't be duplicated. So when it comes to art, there are different ways that you could do it. Some people, they sell the actual art piece, the real one, with the NFT attached to it. And the NFT is more like a certificate. Mm-hmm. Like, hey, like I'm selling, like, for example, if I send you this piece of paper and this is the original one, I just made it, right? So I give it to you, but I also give you the NFT. The NFT kind of says that you own that. It's like the certification of authenticity, which pretty much tells the world that, hey, this person owns the original, the real one. Now, when it comes to music, you could put videos, you could put music on there. It could be anything. So when it comes to music, if you're an artist and you're releasing an album, well, release the album on your own, and you get and you also get royalties. So with NFTs, depending on the marketplace, when they're resold, the original artist gets 10% royalties. Now, I'm sure this could be give or take depending on agreements or whatever, and I'm sure things are going to change in the future. But if you're an artist, musician, you get control of your music. And I'm not too familiar with the music industry, so I don't want to get too technical into that. But that's just kind of the gist of it, like where you own it in that it's the whole craze, and people are like, but it's not physical. But it does. But the NFT doesn't have to be physical, because
Well,
it's
yeah,
like the
I think this is part of the confusion where it's like, because it's in this digital world,
right.
people are like, "What are you talking about? What do you mean?" I think the idea behind it conceptually is to show that there's some kind of certificate or authenticity with something. Like,
Right.
hey, at some point, this particular guy created it and owned it. Now, going forward, I think there's some interesting things you can do with it because it's built on Ethereum, because you can build in special rules, I guess, to how this NFT gets transferred, right? When it gets transferred or sold, like, you know, that could be a royalty. That could be one of the rules that goes along with this NFT, right? But it's quite curious that I'm just kind of curious as to, like, if you would do this for physical objects as well, meaning, like, if I create a new Nike shoe or something like that, but it's a physical thing, but somehow I worked for Nike and I was the original designer, and so I create an NFT showing you, like, a physical picture, or like a digital, it's going to be digital now, everything's digital now, but a picture of me, you know, like producing the first one, so you really know, hey, I was the designer, I was the originator, and you NFT that, so that, you know, someone can't come along 2 years from now or 10 years from now and claim that they were the guy who designed that shoe, right? I mean, is that the idea?
Yeah, basically Logan Paul. You know who Logan Paul is?
Sure. Influencer out there, I guess,
yeah,
Instagrammer, YouTuber guy.
He did a box opening of the first $1 million Pokemon box, and it's only $1 million because he drives the prices up. So, but he did an NFT release.
Okay.
And some of his NFTs were his pack openings, to where you could buy a video, like a 30-second video of him opening the packs and going through the packs and showing off the cards he pulled in the pack, like the Charizard pack opening. And they sold for like $20,000+ per NFT of him opening a pack.
Right.
So yes, that video verifies that, hey, Logan Paul opened this pack, that Charizard, Logan Paul opened it. You could confirm on the blockchain that, yes, Logan Paul did in fact open that pack, pulled that Charizard. The same way you were talking about making a shoe.
Right.
Yeah, you could verify that. But at the same time, kind of like where it ties into the supply chain of things, what I'm doing with Livecanna, you're verifying a product is authentic. Now, you're talking about, is it the first one? Well, you could also number it. I mean, yeah, you could do, this is the first ever, like this pen right here. I just made this pen, and I could sell the physical pen, but there's a digital NFT that could come with it. Mm-hmm. And the NFT could be a certificate, or it could be completely separate. Or some people make art, but there's no physical version. They just make it, and it's purely digital. Because if you make something that's purely digital, like a Photoshop piece of art, well, there was never a physical painting.
Right.
It was always digital.
Right.
So it's super cool being able to own the original, because all the copies, for example, like if there's a really famous meme and this meme is used all around the world, and no one knows the value of this meme because, you know, everyone uses it. There's probably some that you've seen like 1 million times, and it's so famous that if I showed it to you, maybe you got popular like 10 years ago. But if I show it to you, you're like, oh, I remember that. Like I see it everywhere. I'm sure there's some that like if I showed you now, you'd be like, oh, I've seen that before, that meme.
Sure.
But what if the original creator made it an NFT? How valuable would that be? Because I'm sure there are certain memes or certain pictures that you could show anyone in the world, and they're going to be like, oh my God, like I know what that is because I've seen that meme or that GIF, or, you know, there's that one where the guy's like looking like with like the question marks or something, or there's a bunch of like really ones that like when you see it, I've seen that on Facebook like 1 million times in the last decade, or and I'm sure there's billions of people who have seen the same one. But what if you own the original? So like when I first started looking at that as art, I'm like, but like where's the value? But then when you really think deep into it, when you think of it that way, how valuable is billions of people seeing that meme? Well, if there's 1 billion copies, but you own the original, like this is so new, it's hard to put a value on it, like a dollar figure. But in terms of because, you know, money is just a means to an end, right?
Sure.
In terms of like everyone seeing it being that having the notoriety, like, or is that the right way to say it? You know, like being like famous, like being famous, like everyone knows what this is, but you own the original, like the Mona Lisa. Like, how do you know the Mona Lisa is the real Mona Lisa? What if the one because I've been to, I've been to Paris. I've seen the real one. I'm putting it in quotes because I don't know if it's real. They tell me that's the real one, but what if it's? How do I know it's the real one? Right.
Right. Well, that's always been the rub with all of this kind of stuff, especially in the art world. You never know because people could really replicate. I mean, maybe when they first were painted, it was hard to replicate it, right? Because you'd have to actually do the same process. But now we have so many processes and so many, like you could take a digital, picture of it and then print it out somehow. I mean, there's easy ways to really replicate anything these days, really. What is the original? What's the value in the original? I guess that's really the question. What's the value of being able to own the original? Is there value in it? I think some of the value is maybe if you were the creator and you can demonstrate, hey, I created this because I made the NFT right when I created it, then there's some brand equity there for you because it's like, oh, well, people want you to do that again, or they want to come to you for certain reasons because you can demonstrate that, yeah, it was me. It really was me,
But think of it this way. It's because when you look, it's human psychology to look at something like a piece of art, and you're like, well, or like something that was made on Photoshop, and you're like, well, I could just take a screenshot. Why do I need to pay $1 million when I could just take a screenshot? But think of it this way. But here's how you could change your thinking of it. What about an actual US dollar or $100 bill counterfeited? Right? Is there value in the original? I mean, if you could just counterfeit a US dollar, and this happened, there are lots of counterfeits that fall through the cracks. I mean, people pay off counterfeits every single day and get away with it.
Sure.
If people didn't get away with it, they wouldn't be. People get away with it everywhere. I'm sure there are countries who have printed counterfeits. I forgot the story. I know there was what was the country that was printing? It was printing like counterfeit money, but I forget. But I mean, but yeah, there are countries. They've printed counterfeit money in a way of other countries' currencies and whatnot, and like it looks so legitimate, and like no one's gonna question it. And depending on who's dealing the money, how fresh it is, you don't really question it as much, or it slips through the cracks. So think of it that way. Now think of using actual, like dollars, right? Counterfeit dollars. Mm-hmm. Now do you see why there would be value in the authentication process of knowing that something is real versus a counterfeit?
Well, we know, there's clearly value in having a certificate or knowing that it's
real.
Way to
explain it to people who would be
but the weird rub is once you're in the digital world and you can replicate it 100%, where does the value of that authenticity come in?
But you, for example, Bitcoin, you can't replicate a Bitcoin. You have to go pay for a full Bitcoin. You can't just replicate a Bitcoin. I mean, maybe if you're trying to sell it to like someone who has never seen the block, that has no idea what they're doing. But in terms of like actual like math, you can't. Mathematically, you can't just make. I mean, yeah, you can make your own cryptocurrency, but it's not a Bitcoin, or it's not the. You know what I mean? Same with NFTs. There's one certificate, right? You can't replicate that. I mean, you could try. I mean, if you go and you make your own NFT and print it and blah blah, but like there are ways to know. You get what I'm saying? Like it's
yeah. And I'm not dismissing that there's not value there. It's just
right.
It's just a curious thing, man, because it's a digital. I'm trying to wrap my head around the digital part of it. Like what, why is there? Obviously, this is a moment in time where there's just speculation, so that's why things are being sold for millions of dollars.
Right.
That's kind of irrelevant because that can happen with tulips. It can happen with anything, but
it's ownership. It's ownership. Humans love ownership. They want to own things.
Yeah, maybe it just boils down to the human psychology, I guess. I don't know. Well, okay. So speaking of human psychology, I got one more question for you, and that is about our friend Elon Musk. Okay, so. And even Tesla famously, just bought into, put some Bitcoin on their balance sheet for some of the cash they were holding, I guess. And a few other companies have done that. But the curious thing is that Elon has been kind of pumping up Dogecoin lately. Okay, like the last 3, 4, 5 months, maybe longer even. And what do you see the value is of Dogecoin, and why do you think Elon is talking about it when his own company did not buy Dogecoin? I don't think they bought Bitcoin. So what's going on there?
That's the thing. By him having no stake in Dogecoin, he could legally shill it. He has no interest. Like he has no financial benefit.
Right.
And that's kind of where it comes down to. I mean, he's been in trouble with the SEC for pumping, for talking about Tesla, like
right,
going private at 420, right before the split.
Right.
So he's been in trouble with the SEC before. I mean, he's pumping up Dogecoin, and it's a network effect. Cryptos are network effects. I mean, anything is a network effect. Like when you talk about Pokemon cards having value, or Beanie Babies, or tulips, it's a network effect. I mean, the Dogecoin itself, does it have a use case? Do tulips have a use case? Probably not. But like Pokemon cards have a use case. I mean, not really. But like Doge, I mean, like it's holding value that you could transfer. I mean, same thing with Pokemon cards, not as easily. Tulips holding value, harder to transact to maybe. But as far as like Doge, I mean, yeah, like it's still a crypto that you could transact value, right?
But why is he talking about it though? Why does he care?
It's a meme. It's funny. It's a meme.
Is that it? Just because it's a joke?
And it's showing what he does is he's showing society how I mean, what happens when a community comes together and they lift up this thing that is virtually it's a dead end, right? Like Dogecoin is like holding Dogecoin. What does it do for you? Nothing. It's inflationary. It grows by like 2% per year or something, right? Like, I mean, the supply continues to go up, so it's inflationary. So like for it to go to $1, it would have to be in the over 100. It would have to be over $100 billion market cap for it to go to $1. Mm-hmm. It's so just he I mean, I don't know what's going on in his mind, but pretty much like when a bunch of people come together, I mean, like I think a lot of successful entrepreneurs, like Shimoff says this also, and like other people say it, when you're someone like Elon Musk, raising money is very easy. I mean, as you see, like, right, but what's hard is actually being successful in what you're raising money for. Mm-hmm. The success rate. Right. You could raise a bunch of money, doesn't mean you're going to be successful. So kind of look at Doge. It has a market cap of over $7 billion. But is it successful? I mean, but what is it trying to do? And that's kind of like
I don't know. I have no idea.
There's no end goal. There's no end goal.
Right.
There's really nothing there. It's just a meme, a funny meme that's kind of holding value right now. So I don't really know what's going on in his head, but maybe it's a social experiment. Maybe it's just showing off the power of when the people come together, what they can achieve. Because it's very amazing what they've achieved with Doge. It's also kind of giving hope in a way. I mean, I don't know. It's depressing times. People like Elon Musk. I don't know. I mean, like I think stuff that he does or says, like it resonates with people my age and younger. People who are Gen Z, people who are millennial. People who are 30 under. I mean, even even mid 30s. They are my generation and younger. This is kind of how their mentality is. Like it's kind of like why is GME going up? Why is AMC going up? They're dead end companies, right?
Right.
They're dead end. The future is digital. They're not digital. They're living in the past. They're the Stone Age. But why are the prices going up? It's the same kind of thing. It's like it's
so he's just maybe it's just a good way to market basically for him, to keep people interested in Tesla.
I guess social experiments, but
right.
But I do want to say last thing I want to talk about though, I think you heard of Michael Saylor, right?
Michael Saylor, from Microstrategy. So he's the Is he the CEO or CFO of MicroStrategy?
I'm pretty sure CEO,
CEO,
the owner
okay.
of the company. But see,
He's a finance guy. So just for people out there, it's a public company, and they're like a technology strategy company, and I think they do. I don't know exactly what they do, but it's a big deal because famously, I guess a few months ago now, you can tell me the I'm sure the timing of it. They decided to put a big part of their balance sheet into Bitcoin.
they went 100% into Bitcoin at like $10,000, but then but then they started issuing debt
Yeah,
to continue to buy. So they continued to issue more debt, and then Michael Saylor continues to put all of his net worth into Bitcoin. So every time he has an extra dollar, goes into Bitcoin.
yeah.
He gets paid. He gets $15 million for something. Immediately reports that he bought 15 million of Bitcoin. And every couple of weeks, you'd see him putting 15, 10, 20 million. So yeah, like this dude's getting paid on his own too, and he's putting all in Bitcoin. And
Yeah.
he just issued another $1 billion of debt.
Right.
And obviously the collateral. I mean, like for example, like you have Bitcoin, price goes up. Now you could take out debt on the Bitcoin as it's going up.
Right.
So your stock price has gone up 12x. His stock price is up 12x since like the summer. I mean, at the all-time high, it was like 12x. Now it's like maybe like 9 or 10. It's like 10x. Right. I don't know. But it was up to 12x at one point.
So what did you want to mention about him?
My thing is this. Everyone, I think people need to take a step back, and there is value in this, of course. But what I don't want to happen is that a company could say, "Hey, why?" Like for example, Tesla. Tesla bought 1.5 billion of Bitcoin for 30,000. Bitcoin is double that right now. Mm-hmm. Well, it was double that earlier.
Right.
So they made 1.5 billion. Last year in 2020 was Tesla's first profitable year where Tesla made over 700 million. So Tesla was a losing money until last year. Last year they finally made 700 million.
Right.
Well, Tesla doubled what it made last year off of buying Bitcoin. Tesla produces cars. So a company that makes cars and has done so for years finally had a profitable year. All they did was buy Bitcoin. Bitcoin does not. We buy it; it does nothing. You just hold it, right? You're just buying a digital asset and appreciating in value. MicroStrategy bought a digital asset. Stock price went up. Other companies are going to come out and buy Bitcoin. Why? So their stock price goes up. So they get more publicity. So at what point does this get kind of out of control?
Yeah, I don't know. Well, okay, so this point you just mentioned, I think is a little bit important here, because so if I was running a company and I have a bunch of cash, I mean, Warren Buffett, Berkshire Hathaway is famous for this, right? It's like a big holding company, but a lot of their cash, whatever, a part of why the company grows is that they invest, right? So this is conceptually why you might buy Bitcoin for an investment. You don't have to buy Bitcoin. You could buy a share of someone else's stock. You could have bought Amazon stock or Apple stock, even though I'm running this other company as an investment. That's what Berkshire Hathaway does, and you could get a return on it. I think the point buying Bitcoin specifically is that I think these guys, say like, well, look, this is the stuff that we would normally hold in cash. Like we wouldn't normally invest this either and buy other equity assets with it. You normally hold this as cash. I think it's this inflation argument of like, we think our value of cash, the buying power is going down, and we think this is a solid asset to put it into, was why they're moving it to Bitcoin. They're not doing it because of the investment return. However, what you mentioned was important, because I think you're right. Some other companies might do this to kind of just have this cachet, to have this sort of trend happening, to increase the value of their company as a whole, because maybe investors will say, well, I can invest in Tesla as a proxy for investing in Bitcoin or something.
Right.
I mean,
and it becomes a bubble.
Yeah, it's like,
now
what is going on really?
You're bubbling.
Right.
So what if every company stops producing? What if every company stops producing? What if the economy of the U.S. stops producing everything? I mean, we're pretty much right now. We're just our biggest. We produce U.S. dollars. right? We export US dollars.
Right.
We don't produce anything. But what if Tesla's like, screw making cars. I don't want to make cars. I'm just going to buy more Bitcoin. It's going to go up. We're making tons of money just buying Bitcoin. Why do we have to make cars? Why does another company have to actually produce something? I'm going to fire everyone. I'm going to, I'm going to get rid of all of our gigafactories. We're just gonna buy Bitcoin, and it's gonna go up. We're gonna take out more debt, buy more Bitcoin, and that's what Microstrategy does. And our stock price is gonna go up. We're gonna get filthy rich, and that is how a bubble forms. Because I think it's getting kind of dangerous. Because when you could just buy an asset and it appreciates and it doubles your money from what you made in the previous year, actually producing something, like you're producing for the economy.
Right.
Here you're buying Bitcoin. Buying Bitcoin does nothing for the economy. You're not helping anyone. You buying Bitcoin does not help me. You're producing a car that I could buy helps me.
Right.
Right?
Right.
So, you producing a car, you're paying people to build the car. You're paying for the components of the car. So the people who are the whole supply chain benefits. That every dollar, the velocity of the dollar from you building a car is around, right? And that's what causes inflation, though, right?
Right.
I mean, like,
well, I guess you could say from that argument, though, if you're buying Bitcoin, maybe that helps the the computer manufacturers or whatever, that if you have to mine the Bitcoin,
But I mean, I don't want to get into that, but Bitcoin mining is very centralized. I mean, you have to be this billion-dollar organization to be profitable. Like, for example, on the stock market right now, I'm looking at Mara, ticker symbol MARA. They're not profitable. They're net negative. They lose money mining. They're a billion-dollar company, but they lose money mining Bitcoin.
Right.
In order to be profitable, it is. I'm not going to say it's very hard. You have to be very, very rich and in a perfect climate. Like, you have to be like in a cave,
right?
And you have to be somewhere where electricity is practically free. Because for you to flip a profit and make a profit mining Bitcoin, you have to be like, there are not many places in the world where you could get electricity cheap enough and be in a cold enough place to cool,
right,
all your equipment and have enough of it to flip a profit. So, very centralized thing. But yeah, I mean, I'm just worried that we're going into a bubble with where every company is just going to buy Bitcoin, and it's like everyone's a hedge fund now. No, let's stop producing goods and services for the economy, and let's just instead just buy Bitcoin and get filthy rich off of Bitcoin rather than actually produce something. Right. That's where my fear is. That's right. That creates a bubble. Once you see that happening, that's where you got to get scared for the U.S. economy.
Well, yeah, it's just a curious thing, and I mean, this has happened. This just keeps happening. Over time, throughout history. Of course, there's nothing actually special about Bitcoin where this is happening. That's the curious thing, where it's like, this company, it could have been Amazon that people were doing this with. It could, 20 years ago, it could have been, whatever the next new company is going to be, and everybody could just decide to invest in them and not work like you're saying or whatever. This time around, it's Bitcoin that seems to be the case for the moment, but we'll see where it all goes, or how big of the bursting of the bubble is here soon, perhaps. I mean, people keep saying like, oh, Bitcoin's going to $100,000 by the end of the year this year. Could happen,
but it's actually
the bubble
slowing
could burst,
down.
though.
I think it's slowing down inflation, because what causes inflation is I think I'm a big believer in velocity of money being more about an inflation cause, because when you have $1 and I pay you and then you pay someone and you pay someone, that dollar is circulating, right?
Mm-hmm.
So, but if you're printing tons of money, like if the government's just airdropping money, all that money is going into Bitcoin or risk assets, and then that money is just sitting there. It's not moving around.
Right.
Well, now your prices, everything, it's not going to go up, because now like no one's buying anything, so money's not flowing around. And I think that's what's going to we undoubtedly have insane amounts of asset inflation, But in terms of like the way CPI is calculated, technically no. But like I don't believe in CPI. You know, I because I mean like what's more valuable? My house, like to me, my house price, me wanting to buy a house, and the house prices are up like an insane amount versus my food bill going up a little bit. You know,
Right.
when you're obviously when you're lower income, that food bill is gonna impact you a lot more. But when you go and buy a house and you see a house is worth like double what you could have paid for how many years ago, that's more impactful on your life or your college education that is exponentially increasing, or you know, stuff like that. So I don't know. I think there's inflation in some parts of the economy, deflation in other parts. So it's really I don't know. Inflation is kind of like you got to pick and choose where you see inflation, where you see deflation. So I don't know what's going to happen in the future, but all I know is that like things are just really, really crazy. So there, anything can happen. We'll come back. We'll come back to this in a year,
Right.
and see how our economy looks in a year.
Yeah.
So,
Well, maybe we'll do that. Maybe I'll have a start bringing you back just to talk about finance and the economy or something like that, because it is kind of a wild time. It's, you know, it's a little bit weird moment, not because of Bitcoin necessarily or whatever. It's just that, you know, interest rates are low, and you know, we had the financial crisis, and it's just kind of a, you know, this certain period of time, you know, like of what we're living through, you know. Just like in the 70s where we had high inflation, the interest rates were, you know, 10, 12%. It was, you know, maybe even higher. You know, those days are long gone. I don't see that coming back anytime soon, probably for the next 20, 30 years. But we might get back there slowly. We'll see. But anyways, hey, let's leave it there on that note. If people are interested in checking you out, learning more about Bitcoin, or that you're not doing that much consulting, but if they're interested in Livecanna or the Lotus trading alerts, where would you send them?
right. So if they're interested in anything about even just following me on social media, that'd be the best way.
Okay.
By going to @Dan Borovik on Instagram. On Twitter, I am just X Borovik. So just like the letter X
Gotcha.
in my last name.
Okay.
So,
all right, and I'll have those details in the show notes, so you can always find them there. But Dan, we could keep talking another 2 or 3 hours, I'm sure, but maybe we should do that over beer sometime or something.
yeah.
Now that I feel like I need to get out of the house soon, honestly. So we're remote today. Last time we did this in person, of course, but
Right. That was
yeah,
a few years
in
ago.
the olden days before COVID, but
The good days, yeah. Well,
Anyways.
I'm really thankful that you had me back on, and I'll hopefully be on for a third time again in the future.
Okay, sounds good. Thanks, buddy.
Thanks. Take care.
All right, thank you for listening to Jim's Reinvention Revolution podcast. If you want to hear more, join our mailing list at jimjimsreinventionrevolution.com. See you next time, and remember, the revolution has just begun. So dig in, embrace the process of reinvention, and start realizing the success you've always dreamed of. Hey, revolutionaries, if you enjoyed today's episode and today's guest, let them know by commenting on their Facebook page, finding their Twitter handle or Instagram feed, and letting them know you heard them on Jim's Reinvention Revolution podcast, and tell them what you got out of the episode, what you really liked, or how they inspired you. I know they would get a kick out of it and will help others find the same value that you found.